Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of SoFi Technologies, ticker symbol SOFI. And so I do want to note I am recording this during market hours on Tuesday, February 27th. So the price here will be changing, currently above $9 a share, being up over 5.5% on the day, so looking really good. But I do think that we are getting kind of at a risky position having two big green candles so far this week. Yesterday being up just over 4.5% on the day, and then looking like we put in a very small gap between the 2 days. Or if you go from yesterday's close at $8.54, we did open today at a price of $8.75 with a low of $8.70. So there is a gap to the downside. I do think we might be returning to that before we continue to notably higher levels, which I do think is in store for the stock. And so, that's kind of why I want to go over the levels that I've gone over in previous videos and also some new ones that I do think will shed some light on, the potential upside, which I think there's a lot of it for this stock. And so basically, what I have here, this Fibonacci retracement that is in yellow, I did go over that last week, and I did suggest that following that video, which I recorded during market hours on the 20th, so this green candle here that we went up 1.79% on that day, and it does look like that was a bullish engulfing candle. However, we could not get a close above the previous day's high, which was at $8.58. So I do think that is going to be a key level moving forward. But, just to go over what happened over the past week, I did suggest in last week's video that price could be returning to $8.15 based on the 382 level here, possibly coming down to the psychological level of $8 a share, which corresponds here with the 50% retracement at $8.01. And so it does look like the low was $8.10, and that $8.15 was a great dip buying opportunity, having 3 days hitting that level. So that was, a great dip buying opportunity as far as I can tell from those levels. We can see here from $8.15 over the course of these past 2 trading days, currently being up over 10%. So looking pretty good. But, with this big volatile move over the past couple days, I do think we will be retracing to some levels, specifically $8.58. I do think price will be returning to that, and that will basically be testing that as a breakout level. You can view that as, returning to the scene of the crime. The breakout, the crime, was at $8.58 when on Monday we wicked above it but could not close above it. We did get rejected from that level, closing at a price of $8.54. So now I think it's the real test. Can we close above $8.58, getting 2 consecutive closes above it, confirming that breakout? And so with price right around $9 a share, it does seem pretty convincing that we will be closing above $8.58. But, things could turn around, as we have seen turnarounds in the past. It is quite possible tomorrow on Wednesday, we could be closing at $8.50. Who knows? But, assuming that we do go higher, what are some levels that we could potentially pull back to before continuing even higher? And so my thoughts are basically price just below just right around $9 a share, 901 currently, now $9. That is a significant psychological level, just being a round whole dollar number. Also, we do have the 786 from this retracement coming down here from the high on January 29th, which was following this big gap up. We did get a peak on that day of $9.45. But then the 786 retracement is to $9.03. So I do think that's going to be a key level that we do want to be closing above. And also, now that we have a wick high for the day so far at a price of $9.16, we need to be seeing closes above that wick high. Otherwise, that's suggesting there are no buyers stepping in at these new highs, and that price is going to drop. No buyers, price isn't going to go higher. And so with that, if we don't get a retrace to the scene of the crime at $8.58, Another level is potentially the 618 from that, again, orange retracement here. That is at a price of $8.69, and that would correspond with yesterday's high being exactly that, $8.69. So a significant level there. It's pretty remarkable that that number popped up again. And so with that, if we do close above the 1618, which is an extension from this retracement here, I think that would be really good, and that is at a price of $8.88. So if we do close above 888, I think that's good. Even though it's a pullback from current price, that is a significant level. Ideally, we get 2 consecutive closes above that before moving higher to conquer $9 a share. And then beyond that, I do see the 2618 here at $9.35. I could do more extensions higher, but I think, don't want to stretch it out too much. And also $9.35 does correspond pretty nicely with this gap level here at $9.52. That was the low that was hit on January 2nd before gapping down. We almost got to it here with a high of $9.40. There's still a gap there that needs to be filled. And so I do think that we're going to bump into, in all honesty, a lot of resistance between $9.35 and $9.52. And we can also see that reflected if we do look at the volume profile. If I do take a step back, actually, if I zoom in a little bit, perhaps. No, if I take a step back, I swear that I had looked at this and saw a nice volume shelf there. I guess, really that's just kind of reflected here. There's a little bit of a volume shelf there that does correspond with this blip that we have up there. And the reality is when you do have a gap to the downside, there are people left up here holding the bag. And when price does return to those levels, they take a breath of fresh air and they get rid of those shares. They didn't lose money. They're happy about that. And so because of that, we're going to see a lot of resistance right around this level of right around $9.50. So if we do see a pullback there, don't be too surprised by it. But we then have these other levels to the downside that could be acting as support, potentially like $9, a psychological level, current price. If we do get some sideways action here, that could be a bull flag before the next leg up. And then we retrace to that consolidation that would then act as support. And then taking a step back from these levels, I do have this thick line marked at $10.49. That was the high before this gap down that we saw. And I think that's going to be a really tough level to get to. So $10.49 or right around $10.50. That being a psychological level, $10, 2 quarters. And then just above that, we do have the 1618 extension from this orange retracement, and that is at a price of $10.69. So I do think that those are, more longer term, maybe the next few weeks. Those are reasonable price targets, but I do think that we will probably be returning to $8.58 to test that as support before bouncing. And then as you do see, we do have this volume shelf here. I do think that will be serving as support as it starts to stick out. But, if we can't hold $8.58, this volume shelf really does stick out right around $8.31. So that is a possibility for price to return there if we can't hold these levels at $9. But from this recent Fibonacci retracement that I did from the high here to the low, the 786 is at $8.48. I didn't want to put all of the levels here because I do think it's going to go higher. But if we can't hold $8.58, look for $8.48 or, potentially $8.30 to be acting as support. But really, I do think it's going higher, and I do think that worst case scenario, $8.58 will hold as support, but I could be wrong. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this and coverage of SoFi. Thanks a lot for watching.